Welcome to Tax Talk UK. We're going to talk about capital gains tax. But before we do, please could I ask you to take a few moments just to subscribe to our channel. That way you'll easily be able to refer back to our content, find other content that may help and support you in running your small business, as well as to be notified as new content as we upload it. So what is capital gains tax? Quite simply, capital gains tax is the tax that's due when you sell something that has increased in value. When you sell something, HMRC refer to this as disposing of. And the profit that you make is known as the gain. It is the profit or the gain that you make when you dispose of an asset that is liable for capital gains tax, not the amount that you receive. So you take the amount that you receive and take off what you initially paid for the item, as well as any allowable cost to end up with your profit. And that is the gain that's liable for capital gains tax. An individual has an annual exempt allowance. This is essentially a tax-free allowance, and you only pay capital gains tax on the gains that are above your allowance. You can find out the annual exempt allowance on gov.uk, as this is reviewed on an annual basis per tax year. So as I mentioned earlier, capital gains tax is incurred from selling things. And HMRC refer to these things as chargeable assets. The kind of things that are chargeable assets include any of your personal possessions that are worth more than £6,000, although that doesn't include your personal car, property that is not your main home, although please remember that if you have used your main home for business or let it out at any time during your ownership, then this will still become a chargeable asset. Any shares that aren't in an ISA or a PEP, crypto assets, and also some business assets. This list isn't exhaustible, so if you're not sure, you should always check to be certain whether the asset that you've disposed of is liable to capital gains tax. If you sell a chargeable asset and you make a loss on it, then you can report this loss to HMRC, and that can be carried forward until such time that you make a gain, and you can offset that loss against the gain. But it's very important that you notify HMRC of the loss at the time to be able to do this. The rate of capital gains tax that you will pay will depend on the total gain that you make, also your other taxable income within the tax year, and whether your gain is from residential property or other chargeable assets. Some chargeable assets have special rules that apply to them. So if you sold something for more than you bought it and you think that you may be liable to capital gains tax, then you can find out more information on gov.uk, and if you're still unsure, you should seek professional advice. You can also contact the self-assessment helpline at HMRC for general inquiries on capital gains tax. And if you do so, you will need to have your UTR number to hand. I hope this has been useful for you. And as I mentioned earlier, if you could just take a moment to subscribe to our channel. Thank you very much. Goodbye.